10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grande and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
If you invest in the stock market, take a moment for this important advice.
Hi, I'm Phil Grande at philsgang.com. You've got to stop listening to the fake business news networks because they tell you what you want to hear instead of what you need to hear.
Phil Grande guides you step by step on investing.
You're going to know exactly what the tone of the market is. Do I sell? Do I not sell? Do I buy?
All you need to know is philsgang.com.
Check it out. philsgang.com. philsgang.com. Hi, I'm Phil Grande at philsgang.com. You know, I've been doing this business of trading over 55 years. God, they make it so complicated. It doesn't have to be. The best way to learn is to follow me, my actual investments. That's right. When I buy a stock, you follow me. Do exactly what I do. That's the best way to learn.
Check out the free 10-day trial. Learn more at philsgang.com.
Be my co-pilot at philsgang.com. Do what I do.
That's philsgang.com. What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone. Learn off of them, one-on-one. Now, that can be really expensive, cost thousands of dollars. But I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's gang.
Now you can learn to invest like a pro with a pro, Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
Want good investing advice from someone you can trust? Listen to Phil Grande.
With what's going on today in the economy, especially the stock market, it gets really complicated, but it doesn't have to be. My job is to make it simple, to get through the fog. And I think I do that, and I think I do a pretty good job of that, especially why you should be buying a stock, or why you should be in the market or not in the market, or shorting.
Invest wisely with the knowledge of Phil Grande at philsgang.com. Phil Grande has successfully taught tens of thousands of investors how to navigate the market with confidence.
Hi, I'm Phil Grande at philsgang.com. That's right, philsgang.com. Join my gang for 10 days. It's free. If anything, during that 10-day period, you're going to learn how the market really works. You're going to find information that you never had before. You're going to walk away and go, I didn't know that. So join my gang for 10 days free, philsgang.com, and you're also going to learn how to make money when the market goes down. It's kind of silly just sitting there when the market going down, hoping. Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network.
with your host, Phil Grande.
And welcome to Phil's Gang. Well, the market is down almost 1,000 points today. No surprise there. This has been coming. I mean, I've been warning, and many people just wouldn't listen. They just, continue to say, oh, it's different this time. The AI craze, right? It's different this time. But every time you say it's different, it's not. It's always the same thing. What most people don't understand, they get so into these tech stocks that they don't realize what's going on around the market and around the economy. Debt. Yesterday, when they came out and said, oh my God, we don't realize, we didn't know how many people were starting to collect unemployment. We didn't realize the labor market's weak. Well, why would anybody realize the labor market's weak when all you hear all the time from the White House is the same old crap?
Very strong labor market.
The very strong labor market.
The employment rate is still one of the lowest we've had in history.
That would point to the labor market.
Given how strong the job market was.
The labor market.
That's all they say, labor market. But it wasn't strong. Every time you looked at the numbers, manufacturing was getting worse and worse and worse. Why? Inflation. Why? Well, the problem with all of this, why the market's down big, you've got to go back and look at debt. When Biden took over in 2021, he went on a spending binge that was insane. Insane. We couldn't afford it. Now, remember the first thing he did, he killed drilling. That itself created tremendous inflation. When we don't drill our own oil and we got to buy it, that's inflation. I mean, that really killed us. That really hurt us when he made that move. And then he comes up with all these social programs. The American Rescue Plan, the Omnibus Bill, the third one is the Inflation Reduction Act. Then all this green energy. We have no money for that. And I remember it was a tie. And Harris, as vice president, broke the tie. And she's responsible for that. So she's responsible. Those are the programs that we are suffering through right now because of the inflation from those programs. You think she cares? She doesn't care. You think anybody in Congress cares? Republican, Democrat? No. Most of those people are wealthy. Doesn't affect them. In fact, what's really interesting that no one ever talks about is how Congress, the majority of members in Congress, like Wall Street, want inflation. Because inflation makes our asset class, I'm talking about the very, very wealthy. I'm talking about the 1/100th of 1%, not to be confused with the top 1%. I'm talking about our owners. They own everything, these people. They're the ones that control the 5 largest banks. The 5 largest banks then control the Federal Reserve. They want inflation. That's how they create wealth. And I remember after the 2008-2009 crash, when they printed trillions and trillions of dollars to put into the economy and the stock market, all the banks were told, don't you dare take any of that money and lend it to Main Street. Don't lend it to Main Street. They're too much of a risk. Remember, they just got wiped out about $14 trillion. They said, don't lend it. Instead, they told the banks, this is Bernanke, take that money and go buy other banks that are failing, so you can get their cash stream, but do not loan money to the guy on Main Street, especially small businesses. And that, remember, was important because it's the small business that's the backbone of our nation. So none of the money went to the backbone of our nation. See, you want to get productivity going as fast as you can, because from productivity you create jobs and you create money and spending. But they said no. What they did is they took all of that money that they printed and borrowed, which was tremendous inflation. Remember, inflation doesn't come from spending more money than they take in. That's deficits. Deficits don't cause inflation either. What causes inflation is the printing of the money to pay the deficits. So we had this tremendous inflation starting to roll on. And remember, they weren't increasing productivity. They were increasing stock prices through QE, stock buybacks. And that's when stocks started to roar. Not from earnings, not from profits, but going in and buying their own shares. So the economy, the country, the debt got huge. We went from 10 trillion to 35 trillion in debt. From Obama in 2009, okay, up to Trump. Now, Trump, on all that debt, he had the smallest share of the debt because he was only in office for 4 years. But the debt of that $30 trillion, all of that except for about, I think, 18 or 20%, was all Biden and Obama, and then now Biden and Harris. So remember, we had all this tremendous inflation going on because of all this printing of money now to pay down our deficits, because we were spending like crazy on all these social programs. So that's what started everything going. But everybody felt everything's fine because look at the stock market. People don't understand the stock market doesn't have anything to do with the economy. Unfortunately, the printing of money that they put into the economy, they also took and put into the stock market. And people believe by looking at the stock market, the economy's doing great, when it wasn't. It was getting killed with inflation. But as long as they could keep interest rates at zero, people could buy cars, they could buy this, they could buy that, right? Finance this, finance that. So everything looked on the surface, hey, this is a good economy, when it wasn't. So what happened was interesting. So yesterday, you go back and we get this, we're told yesterday, oh my God, we're stunned. The economy's not as good as we thought it was. And we're stunned at the number of people who are filing for unemployment claims. Now, if you go back to the week earlier, remember they're saying, oh, we're going to cut rates, Remember we had the PCE, and the PCE came in and they made sure it was just right. It wasn't too hot, wasn't too cool, because remember, when they did the GDP first number, that's the first one they do, they always want that number to come in better than they expected because that moves stocks up. But the PCE, you don't want that to happen. You want it to come in less. Well, they made sure it was just enough, just even. And the stock market went nuts, went up 700 points. Because they're saying, oh, now they're going to cut rates for sure. Remember, they've been telling us they're going to cut rates since October 2022. And the market's gone up 70% since then. And they haven't cut a rate yet. And so I said, now I'll play the cut for you. Here's what I said about that. Next week at this time, I'm going to tell you all the gains that they got, all these gains in the S&P right here, all these gains are going to be for naught. Just watch Nvidia. There you go. And so, and why do I always watch Nvidia? Well, let me show you. Why did I say watch Nvidia? Because Nvidia, remember, is what's been driving the market since 2009. Nvidia is up 54,000%. Whatever happens to Nvidia is going to happen to the market, to the economy. So take a look here. And everybody thought I was nuts when I turned around and said, short Nvidia. And right here, when we had that key reversal, it was over for Nvidia. Remember, at the very top, at its peak, the worst place in the world to buy, the worst stage, here, let me show you. When it hit that peak right there, look at this. That's the stage right there, stage 3. That is the worst stage, the most dangerous stage, because remember, stage 3 is where they start rotating, where the big money starts coming out. But that's the last place you buy. But guess what? We had the biggest buying day in history. That day, 655 million shares were bought of Nvidia. And I said to everybody, this is insane. And the next day, the market opened lower. That's called a reversal. Very seldom do you see a candlestick reversal like that. That means you are in deep doo-doo. And sure enough, and I said to everybody, this is it. And when it starts turning red and my color-coded chart starts shorting it, everybody thought I was nuts. And again, it broke below, the minute it broke through that 50-day moving average, I said it's over. And then you could see the money flowing out. See how it turned red on my color-coded chart? Money's flowing out. So when everybody went nuts last week, and I said, next week this time, I said, mark it down. Next week this time, they're going to give it all back. And they gave it all back. They gave it all back as of yesterday. So the problem has been, since 2009, the creation of debt, the creation of deficits. That's what's killing us. And then they said, oh, but the labor market's strong. It's taking care of the economy. No, it isn't. They've been lying about our jobs. Biden keeps lying on how many jobs he creates. And what he does, he counts the people who had to leave their job for a pandemic. Remember, you couldn't stay at work. You had to go home. And when they came back to work, he called them new jobs, created new jobs. So yesterday finally hit everybody. He didn't create new jobs. In fact, in the last 8 months, he lost 1.8 million full-time jobs, high-paying full-time jobs. And they replaced them with part-time jobs, mostly in healthcare. And healthcare is really a government job because if you're in the healthcare business industry, as you know, you get paid from the government. The government subsidizes it. So not only was our economy falling apart internally because we're carrying this massive debt all these years, and nobody cares about the debt. And remember, it's not the deficit spending more money they take in. It's the printing of money that pay the deficits that kill you. That's where inflation comes. So Biden, he's not creating all. He said he created 12 million jobs. And no, he didn't. He only created 2.9 million jobs when it was all said and done. Pull out all those jobs he's taking credit for that he shouldn't be taking credit. He's at 2.9. At the same period of time, Trump created 6.3 million. But I'm not here to talk about the jobs. I'm here to tell you the reason that the market is crashing, and this crashing has been in for a long time, is because of the debt. We got too much debt. And we haven't taken care of the inflation that debt is creating. Because remember, Volcker took care of his inflation. In 24 months, he raised rates from 11 to 20%. Boom, killed inflation. We've been working, this month here is our 180th month. We're still working on trying to get inflation down after 180 months. And after 180 months, we've raised interest rates from a little less than 1% to 5%. Over 180 months, over 15 years. Are you really telling me they care about fighting inflation? The answer is no. They don't care about inflation because inflation makes the very, very wealthy, the 1/100th of 1%, who own big shares of the 5 largest banks, and the 5 largest banks control the Federal Reserve. They're the owners. They want inflation. Because remember, their agricultural land goes up, their timberland goes up, their artwork goes up. They don't get paychecks. They have assets. And this has been going on now for 15 years and letting inflation go unchecked because they were getting wealthy. So what's going to happen with this market? And are rates going to get cut? I'll talk about that when I get back. Join me free for 10 days.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Welcome back to Phil's Gang. So here's the bottom line. After 15 years, we still haven't beat inflation. How could we? When we only raised rates from less than 1% to 5% over 15 years. When Volcker killed inflation over 2 years because nobody wanted to kill inflation. So, and we've had a lot of messages from the market warning us this day was coming. Let me go through a couple with you. Remember, the market does talk to you. But before I do that, listen to some of these cuts. Go ahead, Willie. Go ahead.
It is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer.
Unbelievable. He's right. The banks are broke. Look what happened last week. And nobody cared. Just like inflation. They don't care about inflation because inflation only helps the very, very wealthy. I'm talking about the 1/100th of 1%. These people are incredibly wealthy. I'm not talking about the 1%. So we got a message from the 5 biggest banks a week ago saying we're in trouble. We're owed $4 billion in payments, and the consumer simply doesn't have the money to pay it. They can't pay. Are you nuts? And then, of course, the banks started to collapse. Here, take a look. I warned my members on the banks. I'll show you right here exactly what happened with the banks, what I told them to do. I got them right here for you. This is amazing. So the banks, everybody started to buy the banks. I go, what are you buying the banks for? You nuts? So here's J.P. Morgan right here. And J.P. Morgan looked like it wanted to break out. And I said, no, we're not going to buy these because we had one. See, these are called tweezer patterns. These little tweezers that look like tweezers. And then not only that, but then I looked at IWM, the small mid-cap, okay, which is very important because if IWM or the small mid-caps break, the small and mid-cap stocks, let me show you, then it's over. It's over, okay? And see all these spindles right here? And I pointed out to him, I said, look at the spindles here. I said, yes, it's been consolidating, but this tells you there's going to be some big profit taking. We better not go in and buy these, and you better not go buy the banks. I said, be ready to. If the banks break out, you can buy a Scout 1 share on J.P. Morgan, Goldman Sachs, or whatever. So if they do break out, but as long as you got these spindles, you can't buy these. And what happened to IWM? IWM totally collapsed. Small, mid-cap stocks went down. It was over, okay? Because why is that bad? Because the way it works in the stock market, wherever IWM ends up, everything else ends there. What do I mean? Your S&P ends there. Your Dow will go to there. Wherever IWM is, it sucks in. If your S&P's up here, it'll suck it in down to here. If your Dow's up here, it'll suck it in. If your NASDAQ's up here, it'll suck it in. It always does, always have. And look what happened. So all of the problems we're having really stems from going back to the dot-com and the housing con. Think why? Because all that housing and the dot-coms and all of that, the banks never paid for it, never took responsibility. And the very, very wealthy on Wall Street, the 1/100th of 1 percentile, they just got richer. They took no responsibility. And so as the years went on, not only did they not take responsibility, instead of, in 2009, when Obama got elected, instead of saying, we got to turn around now, and we got to fix this economy, we're in trouble. And what we got to do is take in money. We're going to print it. We're going to have to go in debt. But we're going to give that money to small and mid-cap sized businesses, because it's small businesses that drive the economy. It's small businesses that's the backbone. They create all the jobs. And what we're going to do is get this money and give it to the small banks, create small businesses. That's how we're going to get out of this mess. No, he didn't do that. What did he do? Obama told, and Bernanke told the banks, we're going to fill you full of money. We're going to take all your bad debt, all your bad loans, give it to us. And then we're going to print money and give you new money. And don't you take that money and loan it to small businesses, because people are in trouble because they got wiped out $14 trillion in this last crash. You go out and start buying other banks that are falling apart. Go out and buy gold, buy oil. That's what they did. So there was no money going into the economy, so that we could build productivity. Why? Because they didn't want to wait that long. They said, that's going to take too long. The 1/100th of 1%, the very wealthy. It's going to take too long. Let's build inflation so we can get rich right away. And that's what they did. By printing all this money, they lied to the American people and said, by printing all this money and doing quantitative easing, it's all going to filter down to you, Main Street. A lie. All that money did is all the CEOs of the big companies got money for free to buy their own shares, to push their own stock up without having to have profits. We began one of the biggest phony bubbles in history. But nobody ever wanted to talk about it and said, oh, look at the market, keeps going up and going up. Yes, and we all made a lot of money as it kept going up. But you got to pay for that at some point. And that's what's happening now. And we had signals everywhere, telling us something's wrong. Something's wrong. Here, I'll give you a couple of things. I'll show you. Again, first of all, one of the signals that we had was right here. Whoops. Here, one of the signals is right here. We had utilities were going up. What's that mean? Okay. The red is the spiders. See the spiders? Okay. This right here is, what date is that? That's, I think, July 2022. And we had that big collapse, about 30%. This is the COVID crash. This is the 2018, the first crash right there. What happens is when hedge funds, smart money, knows there's a problem in the market and the market's going to correct, they immediately start taking their customers, their clients, and put them into utilities because it's safe and there's big dividends. And you'll notice utilities go up when things are bad. I have my members in ED right now and Duke. Let me just show you for a moment here. I have them in ED and Duke. And you can see what I'm talking about. Here's ED right here. Look at that. The market's crashing and my stock is going up, ED. My other stock that's going up is Duke. So what they do is they, just like I did, you put your clients into utilities, okay? And so as the market's going down, utilities are going up. And I showed this to everybody right here. I showed this on Instagram, YouTube, and all I got was, oh, you're nuts, you're nuts. So going into 2018, I kept saying, we're going to get a correction. And what happened? Sure enough, the utilities started to follow, started to go up. So the hedge funds, before the crash, started to buy utilities. And then we had the crash. Next, all of a sudden, the spiders start rallying up again, going towards that COVID, right? Going up. But then we had a warning. Hedge funds were taking their clients and putting them into utilities. Look at the utilities going up. Spot on. Warning, there was going to be a crash, and it crashed. Then here we are in July of 2022. Remember, they brought interest rates down to zero here, right after COVID, to zero. And look how they drove the market up on zero rates. But we also had a warning. Hedge funds, when we're getting towards the top here, hedge funds were plowing their clients into utilities. See how the utilities were going up? Sure enough, the crash. And where are we today? The same thing, right before the starting to crash today. Utilities were going up. So always follow the utilities. I showed everybody that, but nobody wanted to listen. Oh, he doesn't know what he's talking about. Now that's just one. That's the utilities. We also have another one where you have the difference between, here's another warning that is always correct, never wrong. When you have a divergence, when you start seeing the spiders are going up, but transports are going down. What does that mean? That was a big signal we had in the dot-com days before the crash. It means that the spiders are going up, or the diamonds are going up, Dow 30, means they're still manufacturing like crazy, thinking the economy's good. But nobody's delivering any of the goods. It means it's going to crash. Sure enough, we had a crash. So, and you get plenty of signals. Here's another one I gave everybody before today. Okay, right here. This is a chart when you can spot the unemployment rate crossing above its own 24-month moving average. Let's go back here, okay, to the dot-com crash right here. See it? It started to move over its moving average, telling us there's going to be a crash. And we had the dot-com crash. Here again, same thing. We spotted the unemployment rate crossing again above its own 24-month moving average right here, see? Okay, and we had a crash, right there. That was the housing financial crash. Look where we are today. This was the COVID crash. Crossed again, signaling we were going to have a crash. And we did, the COVID crash. And here we are now, signaling another crash. So there's plenty of messages from the market. The problem we have is that all anyone would think about is, as long as they keep interest rates at zero, we're going to get rich. What they weren't thinking was this. As long as they keep interest rates at zero, our debt is going to expand so much, our deficits are going to go insane, and the only way we can pay our deficits is to print money. And when you print money, remember, deficits don't cause inflation. It's the printing of money to pay the deficits down. And that's where inflation started to go nuts, when we kept printing and printing and printing. And then finally, I told everybody that, I think if you remember, it was last week, I said, look at this. Everybody's now buying at the worst spot. They're buying at stage 3. And do you remember what happened when Enron, when I told everybody short Enron? Okay, right here. Remember this, Enron? Here's Enron. Here's what happened. Let me show you. I'm sorry, Nvidia, Enron. Oh my God, I'm going way back. I told everybody short Nvidia, Enron too back then. But back here, Enron, Nvidia. Nvidia, on June 20th, we had it hit $140, Nvidia, all-time high. We had a historic number of people buying shares. No time ever has we seen people buying 655 million shares of this stock. And the next day, we had the biggest signal that a crash was coming. We had a reverse candlestick. Morning it opened up, the candlestick opened down. That's called the reverse candlestick. At the top here, remember, everybody avoided, even though I was saying, and I was telling everybody, look, man, you're at stage 3. Here's your stage 1, stage 2, and here's stage 3 right there, right at the top. And why stage 3 is so important? Stage 3 sends you a message that it's over. Okay, that they're going to start rotating out of that stock. The trend is over. After 15 years, after Nvidia's going up 54,000%, nobody wanted to believe it. So we started to short Nvidia. I said, start shorting Nvidia. And when it started to turn red, right here, right there, on my color-coded chart, we started to short it, and we're still short it today. The key is, for the whole market now, is this. Will the market keep going down? Here's your answer. I'll give it to you. This is the support right there. See it right here? It's got to break the support. I think we're going to have a rally. In fact, I had my experienced members buy Nvidia on what we call a swing trade. It's just a small trade for a few days to the upside because I figured everybody's going to come in and try to buy Nvidia. So they're going to try to run it. And if they can't get above the 50-day moving average and hold for about 3-4 days, and it drops back down, taking this low out, it'll take the 200-day moving average out, and that means we're going to have one hell of a crash. The answer is this market going to get worse? Lies in Nvidia. Why don't you join my gang, Phil's gang, okay? For 10 days, it's free. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.